China's demand for new housing might drop around 50% in the next decade. That's according to a new IMF report out today. It's sending the country's major markets lower once again. We have seen pressure on the Chinese markets now for quite some time. We want to head over to Ines Ferré, standing by with a closer look at some of the movement to the downside that we've seen in Ines.
Yeah, that's right, Shauna. And part of the reason behind the predicted fall in demand for housing is because of built-up inventory and a decline in new urban households. China's population is shrinking and urbanization is slowing, and that slowing demand will make it hard for new housing to be absorbed, leaving a large inventory of unfinished or vacant properties. Now, China's real estate sector grew quickly over the past couple of decades, and keep in mind that China's real estate sector had accounted for about 20% of economic activity. The country's housing sector became a way for people to speculate and invest their money because they didn't see other attractive places to store their wealth or save for retirement. But since the government took action to rein in high leverage developments during the pandemic, activity in the sector has really contracted sharply. Housing starts have fallen more than 60% relative to pre-pandemic levels. Sales have fallen amid concerns that developers, well, they simply lack funding and that prices will fall in the future. What does this all mean for China's economy? Well, the country's GDP grew by 5.2% last year, according to government figures. That's less than 5.4% growth that the IMF had anticipated. The international lender forecasts China's growth will slow to 4.6% this year as demand for housing falls, guys.
All right, Ines, excellent breakdown there and charting as well of the stats that we've gotten out of the region. Thanks so much. Appreciate it.